All right, good morning, everybody. So we're on the other side of FOMC, and no surprise, he really didn't have anything to say other than we're waiting on some clarity from the president, and until we get it, they can't really do anything. They are very rarely ever going to try to front run risk, right? That's just not what they do. So they'll wait until they see clear and present danger before they react, which is why most people say the Fed is always too late to the party, right? They're too late to curb inflation and then it gets out of control. They're too late to cut and then we go into recessions and it gets out of control always, right? But it's not because they're lazy or stupid. It's just because they have to wait for the data to show them that there's a real reason to act. They can't, or they often won't jump in front of hypothetical situations. They have to just wait for it to present itself. And that's where we're at right now. The data does not present a clear and present danger, so they're not going to respond or react. They have to wait for things to get bad. Now, on one side, the market sometimes gives them what they need, right? If they want to see real risk, market gives it to them. We haven't seen that yet. Perhaps if the talks continue to go nowhere with China, that could, unfold in the future, but we're not there at this point. So markets are up around the world. Hong Kong basically flat. Small caps up the most, more than 1.25. And it's interesting that these two are running neck to neck, nearly identical. The NASDAQ and the small caps. Generally speaking, one of those are going to be off, right? A lot of times our four indexes percent wise are pretty close to each other, but the Russell does tend to lag most of the time. And right now it's running neck to neck with the NASDAQ. There was talk earlier this week about some short covering rally, just little signals, little hints that we could start to see one. And of course, it was in front of FOMC, and there's a lot of other things to focus on, but we're past that now. And I would say keep your eye on some of those tells that we use for these short covering rallies, because, well, that'd be kind of fun, right? Catch these low float, cheap companies and give them a rip to the upside, good 8 to 10 days worth of profits and then recycle and do something else. So we're going to get jobs data today. It just goes to the heart of the Fed's dual mandate. And Powell kind of hit on that yesterday. You know how sometimes their mandate gives them two different things that they need to do, right? And kind of ties their hand. Their two mandates are actually in conflict with each other. Anything to do with job numbers, keep your eye on that. The numbers right now don't look to be too far apart. 11,000, right? The forecast is for a reduction in jobless claims. We'll see if that's what we get. But also pay attention to this 241. They have a habit of revising the numbers, right? So we want to see if they change that 241, and then we want to know what the new number is. These aren't far apart, but if the data comes in showing that they are far apart, then we could get a good reaction out of that too. Trump's going to be chipping his teeth around 10 o'clock. As always, whenever you have someone who can move the markets out there talking, you want to be present, right? Be aware that he's doing that. That will override any pivot points, any price action, price patterns, setups, signals, triggers. That's the fuel for the fire, right? So until he's done talking, you kind of got to just tread lightly. We get gas data today. We have the 30-year bond auction. this one can move markets. I know you don't often hear about these auctions, and sometimes it feels like I'm the only one that ever talks about them, but I don't waste my time on something that I don't find useful or relevant. And these auctions are something that I pay particular attention to, especially the 30-year. So on May 16th, we're going to get tick data, and that's going to go to the heart of the bond data. And the last data that we had was from February. Now think about that, right? We're in May now, and we have February's data. We're waiting on March data, which we won't get until mid-May. It's kind of late, right? So with this, keep your eye on the bond auction. The threat with the TIC, not TICK, is this idea that governments around the world own a lot of our debt, and that they could start to collaborate and just dump that debt, right? See bonds start to collapse. So the last data we got in the TIC, the tick, was an increase, not a decrease. It showed, that there was still consistent buying. But that was February. It was before Liberation Day. It was before all these shenanigans and tariffs and on, right? So this is the last 30-year that we're going to get before that May 16th data. Keep your eye on this today. It's 1 o'clock. It's a bit early to be nerding out on bond stuff, huh? It looks like Trump may have a chance to talk again around noon. On this website, it's showing local time, not Eastern time. So it says 11. It's actually 12. If he's at this celebration of military mothers and they start asking him questions, it's possible that he could be quoted again around noon. So be mindful of that. If there's not going to be any Q&A, or if he just avoids, talking to the cameras, then sure, no problem. Just be mindful of that, right? Volatility trigger 0 gamma are now underneath us, not by much, but we're on the positive side. So we're above the 10, the 20, the 3, all the major moving averages. We're above all of them. Now we just have to keep it. 58.20 is the call wall. 52.20 is the put wall. Long ways off. Not expecting any impact out of that. The AM edition of Spot Gamma came out right before I started. They've got resistance at 57.25 for the SPX. That's higher than everything we have this week. It's higher than last week. So we're looking at an inside week breakout before we even get to that 57.25. Above that, 5,800 and then 5,900. And they call that 59 a long-term top at that 59. They have support at 5,600, 55, 53, and then negative gamma as of the 8th under 5,300. Lots of room, right? 5,300 would basically be a breakout of last week's low. So our support and resistance levels, according to Spot Gamma at least, are beyond last week's high and low. That's it gives you some room, right, on what you want to aim for. We've been going sideways for a few days, which kind of primes the pump. Markets often make big moves after they go sideways because they build up energy. So we've been building up the energy. We're done with the hurry up and wait. We can now start the move. You could use those wider levels for your targets, right, to trade options against. $57.20 is today's ADR half. We didn't hit it, but we came really close to it. If we get above it, that will set us up for the next level. It's basically 5,800. A phrase we often say is if we get to this ADR half early enough in the day, we can go to the other side by the end of the day. And that wouldn't be bearish, although it might feel that way. It'd be more of just a function of how price works, right? We go in waves, even if it's small waves like we have here, or bigger waves, which would put us down here. It's just a part of these waves, right? It's just what price does. So we could go to the other side by the end of the day, not because we're bearish, but because it's just a part of a bigger wave. If we were to back out a little bit and look at it from a bigger perspective, right? Bigger waves, broader time frame. We didn't actually hit it though. So does it still count? I mean, it's close enough. And if I was on TradingView rather than Thinkorswim and looking at that ADR, maybe we already did hit it. It depends on how the calculation is done, right? And this isn't science down to the tick anyways. So if we break the last pivot that we had put into place here, it's 56.92 cog line, get below this wick, then we can maybe target the halfback, get through our own go backs low, then yesterday's low, and then target that ADR half on the downside. Certainly looks like we want it. Just keep in mind, it's not bearish, right? It's not bearish from the sense that we would want to run out and buy a bunch of puts in the Mag 7 and everything else. It's just a function of the wave of what price does. Today's floor pivot channel is very narrow. A narrow channel implies that if we break out, it can stick and that we could really run. Well, we did break out and we had a good run, but it's turning around and it's coming back. At this point, if we get back inside of yesterday's range, I would find it hard to believe that we can get back outside of yesterday's range again. And we also have the 5,700 line in the sand. So that needs to hold. It's this pivot point that we bounced on around 12:30 last night. If that doesn't hold and we're back inside of 56, then we've got 56.92. We've got yesterday's high. Then we've got this sort of liquidity gap high in that 56.80 area and just trigger on down, right? Level by level by level. Price opened underneath the floor pivot, which is considered bearish. We already hit today's pivot, so we don't have an MDP. And while we made it through R1, we didn't make it to R2. So cutting back below R1 gives us another reason to believe that we would make it back to the floor pivot. Underneath our own floor pivot is the weekly pivot, 56.32 cog line. Below that, we would target the S1, which happens to also be yesterday's low. Of course, with all of this, we can snap a half back on the entire day for yesterday. We can also just snap one on the RTH of yesterday. They'll be a little different, right? Since the RTH of yesterday ended here on the upside, whereas if we used the whole thing, then it was all the way up here. So like 15 points higher. That'll throw off where the halfback is. So we started this week talking about higher lows. And the idea was that we're looking for higher lows to kind of build out on the idea that this is the low. Now, I don't know if that is the low or not, right? He could say something really negative and send us to the downside. And even the bullish exuberance that we started to see yesterday on these Swiss talks with China, they asked him yesterday if he was willing to cut back on that 145 tariff number if it could get China to come to Switzerland and talk. And he said, no, absolutely not. That I'm not cutting back on anything. Nope. I think the market's going to be sorely disappointed when we hear about this meeting in Switzerland just to find out that the meeting is nothing more than a talk about what they're going to talk about, right? That this meeting is not about the tariffs. It's about starting a dialogue and what the rules are going to be for the dialogue. That's it. The market's probably not going to be pretty happy with that when they're already thinking that these talks are a part of the negotiations to end the 145% tariff number. And they're not. So is that the low? Don't know. What we have so far is a higher low, and we were looking for another higher low. I was expecting a little deeper of a pullback, maybe something into that 20 period moving average. We didn't get it, but we did get a higher low. Now, this is kind of shallow, all things considered, right? Compared to that one, it's really shallow, but it is a higher low. So now the concern is that we may start developing a bottoming formation where we set this higher low, then we roll over and we set a lower low, maybe set a lower high and then another lower low, but we don't break that low, right? We just have this price action where we're chopping around here sideways. We talked about it the first of the year that we could spend a year in this range, right? Chopping around without ever having gone anywhere. And by the end of the year, still not be back to all-time highs, but not sitting down, in the 3,800 area. So these higher lows that we were looking for and the higher highs, if it stalls out, we'll just be, building more of this complex basing pattern. Friday's close, I have it marked here. You could also just mark all of Friday and measure that. So if we do run back up, which, yeah, that's looking a little weak, but it did bounce on that round number 57. If we run back up and we break Friday's high, then you've got the fib levels, right? So 57.25, we got 57.38, and then 57.54. Feels like a long ways off when we're at 5,700. Okay? But we did get that higher low. We hit this high volume node from last week, we didn't put much in. If you look at how much we have here, we didn't really leave a footprint when we got up there this time. But you could consider that unfinished business, trader's remorse. There's a lot of names for it, but either way, we hit that high volume area. We weren't able to work our way through it. Now we're fading back off again. The thing is, a lot of times when we hit one of these high value areas or high volume areas, the first touch is a rejection. It's how we deal with that rejection that really matters. We rejected here and we pulled back. Nice, clean, healthy rejection. And then we made a new high and we hit another large volume area and we pulled back again. So we could find structure at 57 and then start another leg up just like we did here. The textbooks will tell you to measure that ramp or that leg and use that to project the next leg higher. Now, we don't know if this is the bottom of the leg yet, right? Like here, we don't know if this is it, but if it is, then we would just take that. And that gives us 57.32 cog line. Imagine that, just lines up with another cog line. We hit a high volume node, we're falling down into a high volume node. This one's a bit more sloppy. It's wider, it's more distributive. And 56.92 seems to be the highest point of all of it. It's a little lower than I'd want to see if this is just going to be another one of these pullbacks. But if 57 doesn't hold, then 56.92 is a high volume node. Ten-day, 30-minute volume profile with TPO. The TPO looks relatively clean, all things considered, but the volume profile is a mess. There's really nothing here of value or insight. We were chopping around the point of control. We've expanded beyond it. We're hitting Friday's high. It's the same resistive structure value area high that nothing's here, right? We got to get out of this range. And if we do, there's nothing up there that the volume profile would show us. To the downside, 56.50 or 56.45, it's where the point of control is. And then it gets really shallow after that. And shallow areas is where we can move through those areas really quick, right? Now, that doesn't mean that we have to. We came down and found structure in that shallow area. We found it again and again. So we don't have to cut through there really quick, but shallow areas do imply that we can move through them quickly. You know, when we think about initial balance and the idea of unfinished business, there's a lot of talk about how if you get a lot of work done in the overnight, that there's really not much left to do on the intraday. Right? You can kind of see that with Friday, where we had this really expansive Globex. And then when we got into the regular trading session, there wasn't a whole lot left to do. Right? And if you look at Friday, where all the volume was in that distribution, it was right up there when we were just hanging out, right? Since like around 11 o'clock, we just sit there chopping all afternoon. A lot of fun, right? No, not really at all. So bring us to this morning where we've got a pretty good size move in the Globex. It's the same idea. We've got a lot of business already done. How much more do they have left to do today? And the point of control is across this top, just as it was on Friday, right? Only on Friday, we built that point of control up at the top in the later part of the day. We built that point of control this morning with an hour and a half of data. 2 hours from 5:45 to 7:45. And really, it wasn't even that long. Hour and 15 minutes. And we put in enough volume in that 75 minutes to develop a point of control there. Now, we don't have the TPO's point of control up there yet, but I would expect it to be up there soon. And now that that's over our head, that's a significant level that we have to fight through to be able to get our breakout and continue to go higher. This is a point of control that we no longer need, but we built a new one yesterday. So we'll just take it and use it down there. $56.32 cog line. Imagine that. Just lines up. Keep your eye on the value area high and the value area low. It lines up with this low that I talked about a little earlier, 56.92 cog line. If we break that, it's game on to the downside. There's not much holding us back at that point, right? That is our established line in the sand. And I like that better than yesterday's high, right? Because yesterday's high was a part of this explosive move and then just, a lot of trash up here in this wick. I'd rather use 56.92 cog line and the value area low. More structure. So the good thing is we're set up for the move. Could have a really awesome trading day. Finally getting out of this choppy sideways price action and getting a chance to go somewhere. Look at the weekly expected move. The gray line is Friday's close, which we'd already mentioned. And we've been holding in the lower part of the weekly expected move. If we get a breakout today above that high of Friday, we have a chance to go all the way to 58.26 by the end of the day. I know it seems like a long ways off, but price can go from the low end to the high end in a single day. It could easily go from the midpoint to the high in a single day. That's not a problem. On the other hand, if we do continue this turnaround, then we could make it to the bottom by the end of the day. It's 55.94 or 55.92. We're not extreme on our distance from the 10-day, so it doesn't owe us any sort of mean reversion or turn around and go back the other direction. Not at this point. We'd have to go a lot farther. 2.5, 2 3/4, closer to 3%. Then we'd be concerned about some mean reversion. But 1.6, that's not enough. We're fine. And for the 10-week, 1.4 above the 10-week, and we're actually on the way back down. This is not extreme. It's not, overbought, not overextended. Nothing here says we're going to pull back just because of how far from the 10 we are. It's fine. This week, there's been multiple news articles that came out on these SMRs, those nuclear sites, small nuclear reactor. And Google News this morning says they're going to fund the development of 3 nuclear sites. So it's just more of that SMR playlist, right? The thematics on the small nuclear reactor plays. Then there was news on SMH walking back the Biden era chip restrictions. How far they can go with that, I don't know, right? It's somebody's going to throw a fit about national security at some point, but just walking those back, or even the idea that they could walk them back, sparked a move in chips this morning. And then we had bonds or Bitcoin, I believe, getting into 99K this morning. And if we get those moving that much. Then we get their proxies moving, right? We get Bitcoin proxies, Mara, Hut, Hive, Riot, Coin. So we can see a couple of Bitcoin ETFs that are popped up solid. And Bitcoin miners like MSOS, which was getting some pretty interesting flow yesterday, and it's got earnings like right around the corner. The thing about this chip news that has price sitting up here like that, and it looks just like Bitcoin, this big gap up and a little island that we're just building out here, is it's a perfect rug pull. I don't know if they're going to pull the rug, but it just has that look. So whether it's Bitcoin or the semiconductors and you're using SMH, or maybe you want to use, some other chip ETF, that island reversal, it's not an island reversal yet because it hasn't dropped back down. But if we were looking for a gap and fall, this is the perfect setup. We've run back up. We're at the high of the play. We get this perfect gap to the upside. Yank the rug out from underneath it and dump them on their head, and be a really good bull trap. And it's right at the year-to-date anchored VWAP. And Bitcoin has that same island setup right now. And it also is on that year-to-date anchored VWAP. It's what it hit last night. I don't know if they're going to do a rug pull, but it sure feels like it. So we have every sector we need for that bullish rally that we've been talking about this morning. And if we look at the things that are down, pot stocks, precious metals, gold miners, we don't need any of those, right? It's fine. We can do without, no problem. And even the things that are in the middle that don't meet our qualifications for how much they're up, we don't need any of these either. Utilities, staples, they're not our risk on sectors. But with all of these risk on sectors being up, we've got the Mag 7, we've got tech, communications, chips. Why are we selling off into 5,700? So just watch for that rug pull, right? Because it doesn't look right on Bitcoin, and SMH looks like the perfect setup for that pull. And if we don't get it, all we got to do is hold the high today. If the ES can keep its half of yesterday or better, right? And if it can just hold near this high that we've got this week, stay above 56.66, which is this 4-period daily moving average, then everything's fine. And like I mentioned earlier with the ADRs, we could hit the other side by the end of the day, the lower side ADR. It wouldn't be bearish to do that. But if we lay that out, what it would look like, then be up, down, up, and then we'd be coming back down again, and just holding inside this range. So everything is bullish. It's what we have so far. If that bullishness dries up, it does not put us in a bearish bias by itself, right? That alone Just not having the bullish exuberance does not make us bearish. You'll want to look for bearish signals. And if we start breaking the levels to the downside, just play them level by level. No reason to, try to eat the whole pie in one bite. Watch the headlines. Keep your eye on the news. Remember, Trump is going to be back at noon and has the opportunity to perhaps speak again. We don't know if he will, but he's going to be at this Military Mothers event at noon, and he could. And then we got bonds at 1 o'clock. Be careful. Be safe. I'll see y'all tomorrow.